Just signed the largest trade deal in history, I think maybe the largest deal in history, with Japan. And that was done with Japan. They had their top people here, and we worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that. But we're doing trade representatives, and these were the top people. We concluded the one deal, Doug, and now we're going to conclude another one because they're forming a joint venture with us in Alaska, as you know, for the LNG. And we have Europe coming in tomorrow and the next day. We have some other ones coming in. We're doing things that have never been done in this country before, and our country is becoming very rich again, and that's the way it should be. They're not taking advantage of us.
Japan's $550 billion gamble to end the trade war. What do you do when your closest ally threatens your whole economy? Do you fight back, or do you pay them off? Japan recently had to make that exact choice. To avoid a damaging 25% tax from the United States, Japan has apparently made a huge $550 billion bet on the American economy. We're going to look at where that money is supposed to go and try to figure out if this is a brilliant move or just a desperate attempt to survive. Section 1. The problem. For months, Japan, a country that sells a lot of its products overseas, was in a standoff with the United States. The threat was a massive 25% tax, called a tariff, on thousands of Japanese goods. This was a very serious problem. In Japan, the car industry employs about 10% of the entire workforce, so this was a threat to their way of life. Cars and auto parts are the most important products Japan sells to the U.S., and a 25% tax could have sent their whole economy into a tailspin. This new threat was on top of an already painful 50% tax on Japanese steel and aluminum. The U.S. government's message was clear: agree to a new deal or get ready for economic pain. The Japanese government was trapped, and time was running out before the taxes were set to begin. Section 2. The solution. Instead of fighting or giving in, Japan tried to find a third option: a deal. In the agreement, which was announced in late July, the U.S. lowered its threatened 25% tax to 15% on most things from Japan, including cars. But this relief came with a shocking price. In return, Japan promised an incredible $550 billion in investments and loans to help rebuild American industries. The money is aimed at important areas like computer chips, medicine, shipbuilding, rare minerals, and artificial intelligence. The problem is, many people doubt this number. Some experts, and even some Japanese officials, think this isn't new money, but just a smart way of repackaging investments that were already planned. The details about how or when this money will be used are very unclear. Section 3. Brilliant move or desperate surrender. On one hand, Japan's government has reasons to call this a victory. The stock market went up after the deal was announced because investors were relieved. Prime Minister Shigeru Ishiba is calling the deal a major success that shows the U.S.-Japan relationship is as strong as ever. After all, they did avoid the worst-case 25% tax. But the argument that it was a desperate surrender is also very strong. First, a 15% tax is still a big problem for Japanese companies. Then there's the question of the $550 billion. Is that number real or just clever math? To make things even more confusing, U.S. officials have said they will get 90% of the profits from this new investment, which has caused a lot of confusion in Japan. And here's the biggest twist: the U.S. taxes are already being challenged in American courts. This raises the uncomfortable possibility that Japan just promised $500 billion to fix a problem that might have disappeared on its own. Call to action. If you're getting value from us breaking down these complex global deals, make sure you're subscribed and hit that notification bell so you don't miss our next deep dive. Section 4. The geopolitical chessboard. This deal isn't just about money. It's about power between nations. The U.S. is now reportedly showing off this agreement as a possible template for future deals with others, like the European Union and South Korea. though it's not clear if they would accept terms like these. The possible strategy seems to be: promise to invest huge amounts in the American economy, and you might get a lower tax rate. For Japan's government, this was a very difficult situation to handle. While Prime Minister Ishiba's government calls it a success, other political parties are calling it a bad deal for the country. It shows how much pressure allies are under when dealing with U.S. trade policy today. The relief might not even last long. The U.S. has warned it will check in every few months and could bring back the 25% threat if Japan doesn't keep its end of this very unclear bargain. Conclusion: so Japan's $550 billion gamble is a messy mix of practical decisions and politics. The country avoided an immediate economic disaster, but the cost is enormous and the strategy is confusing. The core of the deal, that massive investment number, is still surrounded by mystery. No one seems to know how much of that $500 billion is actually new money. What happens in the long run will depend on whether this historic payment actually helps the U.S. as promised, or if it just sets a very expensive new example for how to deal with an unpredictable ally. So what do you think? Did Japan just make a brilliant investment, or did it write the biggest check in history to pause a trade war it knows it can't win? Let us know your thoughts in the comments below.